Hello and welcome to Trading with Technical Indicators. My name is James Boyd. We welcome you on this August 10th. My gosh, what a weekend we had. I'll maybe tell you about that in just a moment. How was your weekend? I got a community barbecue this weekend on Saturday at my house. It's going to be a big one and inviting all community members. So looking forward to it. My friend and I are going to be the pit masters this weekend. So yeah, busy week last week and busy week this week. Let's get at it here as we talk about trading with technical indicators. We got with us Charles, Chris B, Selva, Scott at Luck. Aloha back to you. Dom, Randy, Rojo, Richard. We also have Scott Thompson with us in the chat. Say hello, Scott. Let's go ahead and hop right in. Now, remember that we do post on X. We post announcements and also educational examples. My handle is at James Boyd CS. I'll show you that in just a moment. Just real quick as we're getting started, the information that we talk about and I present here today is done for general informational purposes only. Now, this webcast is broadcast via on YouTube. So this page right here, and I'll send this to you, is right there. So if you want to share this, talk to your investing friends or just colleagues, etc., go right to YouTube, type in Trader Talk Schwab Coaching Webcast, and you're going to see that you can subscribe for free. Okay, now this also class has a playlist. Scott sent this as well. I'll send it again right there. Has a playlist for this class. Think of this as maybe your favorite show that you like to watch. These are the prior episodes. Last week we talked about bullish gap down reversals. And so each week we'll add that episode to this channel of Trading with Technical Indicators. Now, as we get going, remember that if we bring up stocks and maybe options, remember that options carry a high level risk, not suitable for all investors. All option strategies are not the same. Also understand that our examples will be done in the Paper Money software application. When we talk about examples, understand that investing involves risk, including loss of principal. Okay, so no reward without risk. Okay, the question we want to ask ourselves is there a risk of not investing? Something. Okay, and that something might be inflation, just eating away the value of that money. So just putting money in coffee cans in the backyard might not be maybe a strategy that some investors might be looking at, and that's why we're here today. Now, as we get started here, I want to talk about the markets. I want to talk about the Paper Money account, and I also want to talk about with the focus of buying stocks at and or near highs. And sometimes there's like a mental block when I say that. It's like, wait, we're buying at highs? Sounds dangerous. Well, we're going to talk about that. Now, just real quick as we get going here, I'm going to bring up, first off, let's look at the SPX. When I said buying at new highs, well, last week we were at a new high there. We were at a new high there. We were at a new high there. So the first thing that we want to know is if we're at a new high, doesn't mean it can't go higher, okay? Doesn't mean it can't go flat or sideways. More of the story is if you actually are at a high, we know that is what we call an upward trend. It's made the higher high. So far, when we look at these charts, and I'm going to go through a couple of them, kind of a stiffer flag so far. What I mean by that is we had the pull, the price ascension, and then so far, we've kind of gone sideways. Let me show you a couple charts. This next chart, you're going to see that we're just still kind of sitting up near the day's highs. Okay. Third chart in, we don't need to look at. Fourth chart in, we don't need to look at either. But this chart, that's the one we want. When you look at this on the trend candlestick chart, still green candles, not seeing any orange candles yet on the daily chart of the trend candles. And you're also going to now see that when you look at this on a weekly chart, there she is in all its beauty, okay? Now, that chart kind of still showing that ascending triangle breakout from last week, and, you know, as long as we hold above support 1, 76.50, worst case scenario, maybe 75.60, okay? Still in the process of making the higher low. Those are the levels to be watching. Now, super quick, when I go back to a couple of these areas, the one thing that we do want to make sure we're aware of, wouldn't take a whole lot to realize this, but you're going to see that crude oil on the left-hand side is near the top. Now, I put that in the indexes. Why? Well, because that can impact what the equity markets do. Okay. So we see crude oil up, let's say 346. Okay. I was walking through the mall. Someone had a t-shirt and it says the Hormuz is open, cross it out. Hormuz is closed, cross it out. Hormuz is open, cross it out, and had, it was just whoever's making these t-shirts are really good. Okay. So the moral of the story is, do we know if the Strait of Hormuz is open? It might be for a couple of hours. You have to understand that maybe they don't want it open, right? Maybe they want that volatility of price to push up the price because they're the sellers of it. I mean, come on, let's not be confused here, okay? Whoever is consuming, obviously we want the price to be lower. But if you're selling, a little dysfunction might help the price. I mean, let's be honest. Now, if we take a look at crude oil, that's going to be something we kind of focus on a little bit here today when we talk about buying maybe at or near highs. When we also take a look at, let's say, the NASDAQ, the one thing you're going to see on that NASDAQ, it's still holding in the mid channel, not retesting that 23% line. Remember we said last week, what's the chances of us probably going up to that 30,665? Probably pretty high. The one thing that we have not seen that we say, nah, this hasn't been that great, the semiconductors, the big names, the SanDisk, the WDC, I'll include Micron in there, but maybe that's not as bad as SMDK and WDC, etc. The SOX is still holding the breakout, but we need more out of that to get some help to the NASDAQ. Now, that doesn't mean that the NASDAQ is bad in general. It just, we want that to kind of help the NASDAQ. That NASDAQ actually still holding fairly strong. Dow Jones actually holding, sitting at the 20-period moving average. And Mr. Russell down 0.6. That one kind of drooping a little bit more in the flag, might be trying to make a pennant, but nothing we really see that really looks that bearish, okay? And just in the last couple of days, they were at a brand new high. Now, what I want to do is I want to kind of bring up a couple things to begin with and kind of talk through some examples. So first off, when we pull up the paper money account, so the way that we really learn is we actually get off the chairs and we just go practice, right? If we were playing tennis, basketball, whatever it is, you don't learn by just sitting there, watching someone. Get out of the bleachers and let's practice together. Now, a couple things, when I pulled this account up today, a couple of the positions that are kind of standing out a little bit is Dell. I know you're thinking, man, he just doesn't give it up. He just doesn't. Okay. This is not the get even trade. We have done that before. Okay. Dell's helped this account. Microsoft has actually helped this account. Okay. And so we do have some tech names. I mean, Apple, Amazon, okay, CrowdStrike. Let's go back to this just real quick. Some of you tell me you saw this. Okay. CrowdStrike, cybersecurity, hitting some highs. So, when we look at this portfolio, you'd probably say there's a Apple, Amazon, CrowdStrike, Dell, Corning is in there, Coke, Staple, Airlines, okay, financial, tech. So we have a decent mixture of tech, okay? Now, what I want to do is I want to kind of talk about some of these names. We'll show some differences here. I want to talk about oil names first. Now, our focus here today is talking about buying stocks at brand new highs. I have a good friend of mine. I've been friends with him for probably at least 10 years. When I would talk to him about stocks that are hitting at brand new highs, he would never buy stocks at brand new highs. I couldn't drag him to buy stocks at brand new highs. Okay. And he would always buy these stocks that were hitting new lows or at lows. And then he would say, well, they just kept going lower. I'm like, well, that's what trend is. Okay. So now, eventually, sometimes people come around. Sometimes. Okay. Now, here's the deal. I want to kind of focus on a couple energy names. Okay. Now, if I were to ask you, Debbie, okay, Lisa, if I were to ask you energy names, now, if you watch any of my classes, we talk quite a bit about oil and airlines. Now, pairs trading is where the investor says, oh, look, I'm bullish maybe airlines, and then maybe bullish oil, and then maybe bearish airlines. We haven't really per se done that in the last couple of years. We tend to be kind of more like bullish oil, and then say maybe airlines might be weak, but maybe still have some airlines. Okay. So sometimes we tend to be bullish both. Now that can be the case maybe if the economy or the stock market is strong, like it has been lately. Okay. Now you're going to see that we have love there, and we're going to add some of these energy names. Like what? Now, PIA, let's put PIA to the test here. Okay. PIA deserves a test. Okay. And by the way, she's a tough gal. She can handle it. And if we take a look at this, if we look at, let's say, XOM. Okay. Now I'm going to flash a couple names for just a sec. When we look at, let's say, XOM, is it at a high? Oh, it's not the all-time high. It's kind of like in a neutral zone as of lately, and maybe starting to kind of show a bounce. Let's hold that thought for just a sec. When we actually say, let's say Exxon, we could probably say Chevron, right? I mean, we don't need to be really in the stock market to kind of know this is probably where we fill up some gas, right? Or have. Chevron not getting the push that Exxon is yet. And if you look at ConocoPhillips, I'm just saying the big three, you're seeing if we kind of said which one of the big horses are getting a little push, probably would say Exxon and ConocoPhillips. Now, let's say the investor said, I'm going to actually take Exxon first, and let's kind of talk about these signals. Now, when we talk about technical indicators, whether it's moving averages, we talk about MACD, we talk about stochastics, things like that, the oscillator is going to work better if it's actually coming where they have been pulling back and they're starting to go back up. That's when the indicators are helpful. As you'll see in a moment, the oscillators don't help very much, typically, if the stock is already at a brand new high, because the oscillators are already at a high. Okay? Now, here's what I'm going to do. When we talk about buying at highs, where we sometimes get a mental block is, if I buy at this level, it doesn't mean that we're going to set a stop all the way down to 135. Okay? It doesn't mean we're going to set a stop below 140. It means if we buy here, we're not going to risk it all the way down to zero per se. We're going to actually set the stop underneath the 150, 186. So the exit is based upon the short-term support level that is probably on the higher low, which is probably in the last 2-3 days, or maybe in the last one. And we set that stop below, let's say 151. I'm going to bring up the paper money account so we can put this in there. Now, I'm going to bring it up so we can paper trade it, zoom in. We're going to right click on the chart, buy custom, and I'm going to go with OCO bracket. All right, now here it goes. Now, if I do with OCO bracket, now what you're going to see, okay, yeah, the internet did bog. It buffered. I saw that. That's why I started speaking slowly, okay? So I was watching that. That's why I have two eyes, okay? Now, here's the deal. So if we look at that one, I'll even say 152. If I say 152-ish area, okay, less 2%, 148.96. So this is where we gotta get that mental block. We're not setting the stop down at 140, 135. We're choking the stops underneath the most recent 1 to 2 weeks. If we never get used to buying stocks or considering it, let's say at highs or near highs, you probably never really ride any momentum, okay? I'm going to show you both. Something that actually was in maybe a short-term high, pulling back. This is more your classic oscillators. Moving average, MACD is starting to go back up, stochastics, etc. So if we type in 148.96, now remember how that stop works, okay? If the stock goes down to that price or less, it is triggered to be sold. The problem? We don't know what it's going to be sold for. Okay? The good? It's triggered to be sold. Bad? Where's the price going to be at? That's why we talk about liquidity. You can't forecast liquidity because we don't know what's going to happen in the future. Now, if we actually go back and say, okay, the prior high is 162. This prior high is really about 170. Now, when some traders are talking about where to set a target, many investors say, look, I got to get 6 or 8% upside to really offset what I think that risk could be. So if we said, hey, we're going to set a target at, let's say, 170-ish, that's about 7%. It's really making where the trade potentially could be 1-to-1. Okay. You got to remember something, that reward to risk, if we're talking about stocks, it's a fabrication of what you think it's going to do. Okay. You're just getting an idea. Okay. So if we put that target about 170-ish, trade number one, Pia, if this trade goes south, we'll say it's Pia's trade. Okay, here it is. Here we go. Okay, now, what we're going to do is if we go back and say, what's the account balance? 61,000. So we're going to move that up a little bit, okay, to 6,100. And that's a full position, okay? Now, what you're seeing is, noted, is our cash is negative. What does that mean in a margin account? We're not only trading the balance that we have, but in paper money, we're kind of using some borrowed funds. Okay. Now you can't do that in the 401k or the IRA, right? In the margin account. That probably leads us to think we might want to go look and see, is there something that we could sell to bring that cash balance to the positive? Okay. Now what I'm going to do is, if we said how many shares this is going to be, 38 shares. So trade number one, ExxonMobil, bounce. Now, when we talk about, let's say, the MACD, let me kind of just show you this just real quick. Let me get a chart that has that. There it is. So when I said the MACD is kind of turning, right? This is what I kind of mean on the chart. The MACD has not gone to zero. The MACD has actually just gone less negative. Now, if you wanted more confirmation, the investor's saying, give me that green bar on the histogram. The confirmation is not free. You have to let the stock go up more, which means it's further off support, which means you're taking risk, more risk. So that's why some people like to kind of just see the histogram where it's turning up. Now, always remember, the histogram is not turning by itself. It's actually shadowing what the price is doing. Now, if we take a look at this, going to go back, target, yes, stop there. Confirm send. Trade number one, ExxonMobil. Wait, is this a stock or an option? Never said anything about an option, okay? It's a stock trade. We can see that right there, okay? Now, okay, the comment was, I can see a cup and handle on XOM. Trader Joe says that. You know, I think we could actually, the fun thing with technical analysis, it could be in the eye of the beholder, right? And if you have a marker in your hand, you could draw almost anything. Now, if we take a look at this, you could see that. It's, I mean, maybe I drew it a little too high. Shoulder, not perfect, okay? But yeah, you could say that, Trader Joe. And I would say that's probably not too much of a stretch. To get an idea, if it were to travel that length, width, I should say, 135 to 155. Okay, there it is right there. All right, so we're talking about 20. So if we said 20 on top of 155, it's going to put the target a little higher at 175. Okay, so it's really right there. Fair. All right, now next one. So first off, let me just real quick. Some of you, I just want to make sure that we're crystal clear on a couple resources that we have. Before we look at this next trade example, which we're going to get to, I want to pull up something. Now, many of you are in different parts of the country. Some of you are not, well, not even on the continental U.S. Some of you are in Hawaii. Aloha back to you. Mahalo. Okay. Now, some of the upcoming events, I want to make sure you're aware of this. We're going to be in New York City. We're in Orlando this weekend. New York City on August 28th and 29th. That's the advanced option curriculum. Okay. 2-day event. Scottsdale, Arizona. at the Princess. No, check. No, that's not true. It's actually, oh, okay. Yeah, it's not going to give me the detail. It's not, let me go learn more. It's not the Princess. It's right down the street. It's right down the street. Yeah, the Phoenician. Okay. The Phoenician. The Princess is nowhere near as good as the Phoenician. And if you've been to both, you know what I mean. Anything in Scottsdale, for the most part, is pretty nice or very nice. Okay. JW Marriott, the Phoenician, very nice. Okay. That's going to be right on Camelback Road. That's going to be a one-day event. Okay. Market Drive, they call that a one-day event. When we also go to, for example, let's go back to this just real quick. When we also go back and look at some other events, I just want to make sure that you're aware of. Some of you are also, when we scroll down, Washington, D.C., Technical Analysis and Options. Okay, that's the 2nd and 3rd of October. October 23rd, Miami. Okay, so Washington and Miami. Chicago, Advanced Options. Honolulu, November 20th and 21st. And the ones that I want to make sure that you're aware of is coming into also the 2027. You're going to see in Lido Lens backyard, okay, Boston, okay, right there. So I just want to make sure you're aware of that. Those are showing the events getting into 2027 so you can plan ahead. Check those out. Now, I just want to make sure you're aware of that because, well, we're in different parts of the country and it's also nice to see it live. Now, let's also go back to some of these other names. I'm going to go back to ConocoPhillips for just a second, okay? Now, when we kind of look at technical analysis, we don't necessarily have to do maybe a stock trade. We might say, could we maybe consider something where we could try to get a little leverage? I mean, example given, what if you don't have any cash left, okay? Or you have less cash and you're trying to save the cash maybe for other things. Well, what I'm going to do in this example on ConocoPhillips, okay? Now, here's the thing. If oil goes up, these stocks could be sensitive to the oil price going up, sure. However, it could just be that oil stays up higher for longer, and that's actually affecting what they think the revenue of the company is going to be, earnings per share, things like that. Now, in this example, what I'm going to do, step one, we're going to come in here and just say, look, we're going to buy a call, okay? Now, if we said, let's say, buy a call, what is that really doing? Well, it gives you the right to buy the shares at the strike price. Now, here's the deal. Does the investor really want to buy the shares at the strike price? They might say, nah. Who controls that right? The buyer does. Maybe they just want to have the stock go up in value, which affects the option price potentially. And they're trying to trade the option value that's influenced by price, time, and volatility. So what we're going to do is we're going to come in here in the paper money account, and we're going to buy the September 120. Now, when we buy that September 120, we're going to buy that call for $565. $555 bid, $575 ask. So if we got somewhere in the middle, $565 could be possible to get filled. Now, remember, if we said, how do these options really go up? Well, it's mainly if the stock goes up higher and higher and higher and higher above the strike price, where the investor could buy it at, there's more equity. The other word for equity is intrinsic value. So we're also looking at the technical analysis of this. We did a stock trade on XOM, trade number 2. We're going to buy a call. The con about the call is we need the price to move as quickly as possible. Now, what I'm going to do is I'm also going to actually change this, go for single order, first triggers SEQ, right click, flip the trade, create the opposite order, and we're going to say, give me that target. Now, when we do this, I'm going to do market data GTC, and we're going to make the exit based upon the stock price, okay? Now, I'm going to do it in one of two ways. We're going to say if we go at or above a certain price, at or below a certain price. So if I went back and actually said, okay, if it went up, where might the investor try to sell? Well, that investor, if they said, look, I'm going to try to sell, let's say they said, look, if we go up to 130, I don't mind in selling the call. Now, how profitable would it be? Depends upon how fast it actually goes up, if it does, if ever. Now, if we actually said, I want to get out, the investor actually might say, look, I want to get out if we go to, let's say, below 114. So here's what I'm going to do. I'm going to bring this order up and say, look, if we get at or above 130, sell the call. Whatever it's worth, sell it. Okay? ConocoPhillips, Mark, at greater or equal to 130. Sell the option, less or equal to, if we get, let's say, at 113-ish. I could say 114. I'm going to give it a smidge more. How bad's the loss if it goes down? Well, you get a directional move in the opposite favor, in which you need. The time goes by and the volatility impact, well, it could hurt more, right? So there's three variables there. It's not just price, time, and volatility. And we could actually run those through those scenarios and kind of see the what if game of the Theo price. Target, stop, or I should say target of the shares to be sold at 130. Sell the call option if the stock goes to this price or less. Now, the main takeaway of this is not the option price. This is the stock price. If the stock goes to this price or higher, or this price or lower, sell the option itself at the what? Current market price. Liquidity being very important. Okay, now, I want to actually go back to just real quick. Now, the question was, why buy in the money? The purpose of actually buying somewhat in the money is to have some intrinsic value. Okay, if you buy in the money, the break even is a little lower. Now, we're not buying super deep in the money, but there is some intrinsic value. So we're trying to start the trade where there is some intrinsic value on that call option, which just means the stock price is above the strike price. Save, confirm, send. Note the commission there, 65 cents to buy one contract. So now, is this like buying shares? We're getting a fractional move, okay, of the share price. That fractional move called delta, okay? Now, we're going to see if that can't play out. So we did a stock trade, and then we did also a trade on a long call with ConocoPhillips. Now, let's actually go back to, just real quick, I'm going to go back to Dell. I'll just leave it alone. Well, let's review that. Okay. All right. Now, this is the third time we've been in Dell, and I just want to see the position. Now, why is this position why is this portfolio negative 35,000 in cash? Well, it might be because we got too big of a position in Dell. Dell by itself, okay, 100 shares. Is that even true? We got 100 shares, and there she is right there, okay? 100 shares. So to get the cash balance back to positive, gonna need to try to sell some of those shares. Realistically, I mean, if I just did some quick math in my head, I think we're gonna need to sell about 80 shares of stock to get this back down to where it needs to be, okay? So I'm gonna sell about 80 shares. It's gonna leave us with 20. It's still gonna be too high. We're going to need to probably sell about 85 shares to get down to the position size where it's not too big. Now, watch the cash balance, okay? If we have 100, we sell 85, it's going to leave us with 15 shares. 15 shares, okay, times 439, 6,500. It's a little more than we should have, but all of a sudden, that one position swung the cash back up. So not too tough. All right, now let's actually go back to also some other positions. Now, any questions? Now, on Dell, something to kind of continue to watch. These earnings are coming up, 3 weeks? September 3rd. Now, remember, this has been sideways, and what's made the Dell trade hard is the width of the range is wide. There has been times there, here, there, where you could have got nicked out only to see it reverse on the weekly chart. When we look at this on a weekly chart, pull that up. Here's what it really looks like. And it looks so easy now when you look at the weekly chart. But that's what you got to remember on the daily chart is you're setting your stops on a daily chart. You look at this on the weekly, it's been a very stiff flag. Now, let's be honest. Gary has said, go bearish at your own risk. I mean, didn't Gary say, hey, be careful? Okay, Gary said, be careful. There's some fundamental reasons, okay, to some of the trend that we've actually seen lately. And you're going to see that not much of a pullback, and that blue 10-day exponential, this is a 10-week exponential. You're going to see that has been prices held that on a weekly chart. Now, I said to you before, I think this has been, I'd probably say in the last 2 years, Dell, I think, has been the most, we haven't got whipsawed. Dell has it's whipsawed us twice, okay? And now we're in for we're in for the third time. Let's see if that plays out now. Now, what I also want to do is I also want to go back to just real quick. I want to fast fire through a couple stocks that some investors might keep an eye on. Microsoft, that has continued to grind higher. I want you to notice how some of these stocks that were beaten down, that they reversed. Salesforce, it's even gone up. Weren't these the ones that were down? They were. IBM trying to push back to the upside as well. Keep an eye on that. The other one that's actually was down and reversed back up was Adobe. Okay. That was down and now it's starting to come back. So what you're going to kind of notice is sometimes when things get pushed down, some people kind of view that as maybe fundamentally softness, technically weak, right? And now the company, the board, the senior leadership, they're responsible to actually kind of create a plan and going forward. Keep an eye on that. Now, we also have to actually say in there, Workday, big reversals on Workday. Broke out at 150. Here we are at 184. Not much of a pullback. The other one we're going to keep an eye on is Netflix. It's trying to grind higher. Note that. GE. Okay. And the other one, if we're going to get some leadership in the space of, let's say, semiconductors, Micron is holding the breakout, but it's pausing. Okay. Now, I kind of view this as if you ever tell someone, I love you, and they don't immediately respond back, I love you back, not maybe the greatest sign. So the longer that we go without really pushing up to the upside, that stock is not saying to the investor, I love you back. So this is one that, by Friday, we need a push on Micron. Now, let's go back just real quick to a couple of these other, some of these energy names. Apache, pretty big push. Now I'm bringing up some of these that are lower dollar priced, okay? We're going to go swing right back to where we were before. Marathon P, MPC. Someone says, I like a flag. Valero, we've talked about, right? We're kind of now getting back into some of these, let's say, drillers, if you will. Phillips 66, I'll just bring up this last one. These last two, PSX, Phillips 66, and Valero, two pretty similar names, right? Now, if I went back to Valero for just a minute, what do we mean by kind of a stiff flag? Well, what I mean by that is we had the price ascension to the upside, right? And that we haven't really seen the price pull back off the high. It kind of looks like, it looks like an upside down hockey stick, okay? So we ran up from, let's say, 235 to 320. And if we look at this and say, well, how far are we off the top? And the answer is $7. Now, has that consolidation taken time? It has. Now, here's what happens, okay? Trader number one says, there ain't no way I'm going to buy at a high because it's at a high. Okay. And they'll say things like, well, I'm going to wait until it goes to another high to confirm, which now it just sounds like they're changing their mind all the time. So how about we just did this? How about we actually just practice saying, well, what's the support over the last 1 or 2 weeks? Well, it's been right around 300. Why don't we actually just say, look, we'll buy at a high. Maybe there's reasons that it's at a high. Okay. Well, if it's at, let's say, near a high and we have a support at 300, why doesn't the investor say, I'm going to try to buy some inside the channel there? Let's just say position number 1. And if we break out, okay, I'm going to ask that stock for the second date. What happens is they put all the pressure on themselves on this one breakout point. The problem is that's not how trends work. That's not how relationships work either. Okay. So here's the deal. We're just going to say, look, we're going to take a half position inside this channel. Set a stop below the 300. Second, we're going to set alert at 320. If we get the alert, we're going to try to add to the position. Okay. So how do we do that? Quickly. Well, we're going to do this and we're going to look for some of your questions here. We're going to right click on the chart. Now, how fast could we do this? We're about ready to find out. Okay. And what I'm going to do is I'm going to go Valero. Okay. We're going to right click on the chart. Let's go back to that first chart there. We're going to right click on that chart, buy custom, and I'm going to go with stop. Now, where is that support area that we talked about? We said 300. I'm going to kind of mark it as 298.21. Okay, less 2%. It's going to give us 292.24. Now, if we type this in, and what am I really trying to do here today? I'm trying to get you to stop being so sensitive on new highs. Okay? Now, there could be reasons why that stock's at a brand new high. Ain't just because it's a high doesn't mean it can't go higher. You buy a stock at a low, we've already proven that it could go lower. Okay? That's called trend. Now, what we're going to do is here in this case, we're going to go day GTC. So what we got in this case is we're buying the shares at this price, setting a stop. Sell it if it goes to that price or same price, no, or less. Come back to this, $6,100 worth, 10% of the account value, going to give us 19 shares. How do you set the alert? Well, let's send this first, trade number 3, okay? Valero, buying is an option or a stock? It's a stock position. Now, James, in the paper money portfolio, do you have any energy stocks? I don't believe we do. Okay, we can double check. We got one airline, Love, and after today, we're going to have 3 energy names. Now, all energy is not the same. You can look at Halliburton, and then you look at, let's say, Exxon, you look at Valero. Sometimes there's some differences there of the width or the, what are they touching, like drilling all the way to the gas station, okay? And so in this case, we're looking at these 3 examples. We did Exxon, ConocoPhillips, and Valero. Now, if we send that, there it is. Now, the other thing to kind of remember with the Strait of Hormuz kind of being up, down, I should say open, close, open, close, open, close. I'm not saying that these other regions in the world are going to take the percentage. If 20% of oil production comes through the Strait of Hormuz, if that area continues to kind of be rocky, to say the least, other areas of the globe, they might be trying to produce more to try to make that matter less. I'm not saying they're going to fill in the gap, okay, completely. But what could happen, just like in regular demand and supply, they might look for that supply in other parts of the globe where there's not that type of issues happening to get it from somewhere else. Not a new idea. So trade number 3, Valero. Now, we got a survey in the chat. It's just 2 questions, okay? Click on it. Thank you in advance for filling that out. And also, I'd love to actually see your comments as well. First thing I do in the morning. Now, there's a comment that says, what's another approach to the Valero trade if you don't want to risk a 20-point stop? So that's funny you said that. So when you say a 20-point stop, it sounds like a lot. But what we don't say with actually that is, well, how much is the stock price? Okay. And so this is where it kind of comes back to, is that understanding the numbers of it. So when we actually look at this and said, okay, the stock price, hey, we're going to risk, let's say $20. We don't look at per se that by itself. We actually say, what's $20 relative to the current stock price? What are we buying it for? So we bought those shares for $314.04. We said the support was, let's say, $298.20 or so. I said stop, let's say $292-ish. There's the $20 that MCT VLR is saying. What we're really looking at is we're saying what percent is that of the entry price, and it's 6.94%. Remember, if you buy a stock and you're risking 4, maybe 5%, you got a tight stop loss. If you're risking 5 to 6%, medium. If you're 6 or 7, that stock has gone up a little bit off support to cause that bounce signal to occur. And if you're buying, let's say, greater than 7, I mean, the love boat's leaving harbor here, okay? And all of a sudden, if you're buying it greater than 8% off support, now we're actually saying, do you want to look for another reentry? Maybe you want to do, let's say, a buy limit. When I said the love boat, I really mean the opportunity, the boat of opportunity, if you will, okay? So what does the $20 mean? It means we're not at 7%. We're kind of a little elevated because the stock went up 5% just today alone. But it's not like screaming. Tomorrow, if this stock goes up to 327 and we look at this now, the conversation is different. Now it's actually going to be in this case where now we're at 10%. It's elevated. We're going to need a pullback. When we look at the envelopes, we know where those areas need to be. But if we go back and say, where are the envelopes right now? We're barely at the yellow line, which says we might be freaking out when it's not that high off support yet. Let's see if that continues. All right, now, let's see. Let's go. Any other questions there? Now, the comment was, and I'm not, we did 3 examples in this area. I'm not going to do this other trade. But if we look at, let's say, Schlumberger, okay, Berger, depending upon where you're from. Now, if we look at this, that is the one that you do see that has been carving off the bottom. Who said this? Oh, Bill. Okay, Sharp Eye Bill. And what you're now going to notice is Schlumberger is actually grinding here. That is also one, now we always talk about this, breaking out of a channel, right? Well, if you break out of a channel, if we get much higher than north of 52 and change, how do you do that? I'm going to put our alert, just like we could on Valero, right click, okay? I'm going to go to alert. Now, when we say alert, the alert is if we get to another high. Now, let's just think about this. Let's say someone's bank account gets an all-time high. Their brokerage account gets an all-time high. Their marriage gets to an all-time high. Their house value gets to an all-time high. Is any of those things a bad sign? Any of them? Why is it when we talk about stocks that are trending, if it's at a high, it's a bad thing? It's a psychological block, okay? The things that the investor is looking for, a bullish investor, is looking for a trend. If they buy at and or near a high, it's not saying they're risking all the way down to 0. Now, with a stop, it could go to 0. Noted. But the biggest thing is we're not setting stops that low. Understand that. Now, what we're going to do in this case, we're going to create an alert, and we're going to say, look, if we go at or above where I right-click on the chart, let us know. Now, Bill, if we see this stock tomorrow get north about 53, the path of least resistance, 57-ish, the width of the channel as we close here is going to be right at about, that's about an 8% gap. So keep an eye on that. I'm out of my time here today. Focus a little bit on energy. We're trying to kind of find an area where the portfolio is a little weaker in, and it's energy. We try to actually kind of patch up that area here today. We'll keep an eye on that of this area throughout the week. Don't forget about the in-person events, and also don't forget also about coming up next. We got Cameron May that will be teaching the next class on covered calls and short puts. Join them. Don't forget to subscribe to the Trader Talk channel right on YouTube. It's free. And also remember that all investing involves risk. Today we did 3 trade examples focusing in the energy area. We're going to continue to watch that. And our focus point was really looking for stocks at and or near highs today. I'm kind of trying to break that down. That psychological barrier sometimes that some of us have had. I'm trying to help you. With that said, stay tuned for Cameron coming up next. Thanks to all of you and Scott, and have a great day. Take care. Bye-bye.